Welcome to your Mortgage Insider for June 15th. It is a big day, Fed day. A big decision was made. The Federal Reserve is all-out war with inflation. I think that's the point of their big move today, 75 basis points. Just over 30 days ago, the Federal Reserve Chairman in his press conference after their last decision said that 75 basis points was not on the table. Well, since then, we've had new inflation reports, more record high inflation. Consumer price index was at, again, a 44-year high, a new high again this year, just last month, in the month of May. So I'm going to pull up the charts and we're going to dive into this. So today, and we're already starting to see some turnaround from this morning, but it's not been a pretty week for the stock market. It's not been a pretty week for the bond market either. We have the 10-year Treasury note showing right now. It is down 5 basis points. If we go and just see, as of a couple days ago on Monday, the 10-year exceeded the 100% Fibonacci retracement level, which is tracked on this website. So as we get into that chart, that's if we go back in time, we would find that it's been a really long time since the 10-year has gotten to this 3.25%. That was identified, and we broke above that. Now we're significantly above that. It did hit a ceiling yesterday, started the day off much lower. I think the anticipation on the market was that the Fed would make this move, a significant move, as they did today. And as I'm watching this morning, the mortgage-backed security market, which is the actual, where the rates are coming from, we've got a couple different places. There's different coupons that get filled. So something to think about here. Right now, interest rates are breaching 6%. So more than likely, most lenders are going to be pricing to a 5% mortgage coupon versus the 4.5% coupon that's highlighted here. And that's just starting to be a talk and consideration within the industry, because when the loans get fulfilled and they get sold in the secondary market to Fannie Mae, Freddie Mac, and as Fannie Mae and Freddie Mac sell their bonds, that price, as it drops, means the yield to the investor is much higher, which means the consumer is paying a higher interest rate. Okay, we can see just exactly what happened here the last couple of days. It has been a significant drop in the mortgage-backed security pricing, starting with last week. It became sorely obvious after the inflation reports that the economy is going to have to slip into recession. The Federal Reserve is going to have to act more aggressively than they have been, and a soft landing is no longer in the cards. So that is the pricing in on Wall Street of what happened there. So already today we had started much higher in price, which is an improvement, and now it's turned red, and we're not looking as good as we had thought, even though the Federal Reserve did just come out with their significant change of 75 basis points on the market today. So where do we go from here? There's still a Fed conference. The news conference is happening right now. I'm going to watch that after I post this video for everybody, but just we got to keep an ear and an eye out. This is going to make a steeper impact on the real estate market, real estate sales. If you're buying a house and you haven't locked in, which is really hard to do unless you're in the process, like under contract on a house, there's going to be a lot of reconsideration. Interest rates have now doubled in 6 months. So if we effectively want to look at the interest rates back in January, we're twice as high, and that is going to have an impact. That's the point in the Federal Reserve making these big moves. They're driving interest rate up to slow the economy down. Unfortunately, that is going to be painful for many households that are needing to make a move or in the process of making a move. So you need to just have an advisor on your side in the real estate business that's a real estate agent and a mortgage loan officer. We'd love to just set up a meeting with you and go through whatever we can as far as strategy to put you on the right track for the future. Have yourself a great week, and we'll be back next week with more news.